Want some action. Kevin Green joining me for our options corner. Going to figure out if we can get some movement here. KG, I swear, if you tell me that we're going to go to the top of the range and get rejected, I'm going to be upset.
That could be the case. You know, it's not a boring day. This is actually a really good day for Friday.
I guess so.
Holiday week.
But we're still stuck in the same range, right? We're not like going anywhere.
We are, but we actually have something for everybody. Actually, if you look at the volume chart here for today, this is actually a pretty interesting setup that we've seen. Now, obviously, we started the day off high. We tried to test that 5630 level and then pretty much failed. And obviously, we actually broke through that negative gamma level that we've been talking about for the last couple of days here. And what we can actually see on the chart itself is this continued rejection of 5630. We have to try to break through that going into the close here. Oliver, I'm not sure if we're going to be able to do that. It's going to be very difficult. But if we are, and we're able to have a significant amount of volume to the upside, we could actually see that gap higher and maybe even test that 5650. I think it's kind of highly unlikely, but there is still some premium there. And we also do have low liquidity. But for now, if you're following the trends for the last couple of days, for the last week or so, 5630 is going to be your major wall. Your negative gamma level going into the close here is going to be 5600. And the reason why I brought up the 2-day chart as well is you can just kind of notice here the fact that we actually did make a technical lower low today than what we had yesterday when you're looking at the print itself, which is not good. And if we don't actually make a new high in today's session, meaning we don't crack 5650, we also make a lower high. Compression is still there, but from a technical standpoint, it's starting to look more bearish than bullish. And that's just my 2 cents.
Okay. But if we can end somewhere around here, that would be solid. I mean, it's hard to get too strong with our descriptors as long as we're anywhere within like any of the levels on this particular chart. 'Cause it's only a couple days, but like if we end up here, then that would be decent.
Yeah, it would be decent. I mean, once again, we have these levels still holding on. So when you're looking at it from a volume standpoint, which is this is the volume chart, what you are looking at here is that 5590, pretty much 5585-ish area. We're starting to get buyers to kind of step in. Now, once again, we made a lower low on today's session compared to yesterday, but the buyers are still intact at those levels. Dealers are able to cover that, and then we're pretty much failing or selling at around the 5630 level, and it appears that we might be doing that here again today. But one thing to kind of note, 5600 continues to show up on the radar here. We know that there's a big pen risk area there, a lot of puts, a lot of calls actually taking place there. So what could we see going into the close today? Maybe we do rip higher. It's probably a little bit more likely that we try to navigate closer to that 5600 level, maybe even above it, a couple of points, and maybe even below it. So dealers can stay, for the most part, net neutral. But you have the environment with low liquidity to try to be able to ramp.
Okay. Yeah, the potential, I guess, for us to have a major breakdown looks pretty slim, but the potential for us to fall back into, one of those lower kind of pockets is very fair. So it's not like the Bears are walking away feeling victorious this week by any means.
Oh, yeah, definitely. And actually, what you're also able to see here when you're looking at the histogram is some actually defined areas for the market. 5650 is going to be our area of resistance when you're looking at open interest as a whole. But you're also starting to see a development here at the 5545 area to the downside, where individuals and institutions are starting to pick up some puts. So are we going to continue to have compression the next week? That could be the case. But for now, the rejection and the amount of size that we are seeing on the volume on these rejections, once again, seems a little bit concerning. And when we're looking at these flows, it's a lot of intraday churn on the call side, but a lot more structured puts being held for the longer term happening here. So you're starting to you're getting the market to kind of tilt a little bit, and it kind of coincides with the daily chart where we're starting to get lower highs and pretty much a stalling out type of pattern taking place.
Okay. Yeah, stalling out. All right. Any clues from VIX? That's pretty much all there is to say about the dealer levels, right, KG? Or is there any last thought on those, or should we talk some volatility?
Yeah, let's talk about some volatility here. What we are actually going into for the month of September is potentially a higher regime when it comes to volatility. And so we have to just kind of keep in mind, obviously, we have the economic data that's going to be front and center, especially when you're looking at the the jobs report in September. That's going to be September 6th. So this time next week. But then we actually going to have this window, the third week of September, where we have the Fed meeting, and that's going to make they're going to make the decision in either cutting rates by 25 basis points, 50 basis points, holding at current levels, which I highly doubt, and the market's doubting that as well. So just be mindful that a volatility ramp up could actually take place. What's also happening on that same week, though, Oliver, and we have to keep this on our calendar here, is going to be quarterly options expiration. So you're going to have the futures expiration, you're going to have the SPX indexes and all of that expiring that same week. Those rolls can also create a little bit more volatility. So be prepared for that. It's not going to be next week, but the week of the Fed meeting, we should see some fireworks. Then hopefully we peak out in seasonal vol first week, second week of October. And then that's when we usually get that Santa Claus rally going into the remainder of the year. Decent earnings, lower volatility. Everybody's happy because they're getting presents or whatnot. So that's kind of the outlook for the remainder of the year.
Yeah, assuming the world didn't blow up the first week of November. All right, Christmas seems like a long ways away.
Man, put a smile on your face today. What's going on?
You were the one that was telling us about the vol kink for the inauguration, so.
That was a fact. That wasn't saying a word, man. We're going to be just fine here in the United States. I'm confident of that.
Amen. All right, cool. So maybe next week we get vol to start picking up once we kick into September. For now, August could have gone worse. Fair to say, like we started off in the middle of a storm.
Oh, yeah.
And we came out pretty clean.
Yeah, it could have gone worse. I mean, on average, we tend to have either flat or down months, down month when you're looking at August, and the volatility actually is a little bit higher. Now, obviously, we had that spike in volatility, but overall, if you kind of X that out, because that would be kind of an anomaly or maybe even a black swan type of event, we were pretty much on historical trends, and I think the equity markets actually fared a lot better than what the street was actually expecting. So hopefully, we have that same type of scenario in September as well. But once again, we got to just keep in mind some of the headwinds that are going to be approaching us as we get away from earnings season and really focus and drill down on the macro, and also if we see a re-rating when it comes to treasuries.
Okay. Thank you very much, Kevin Green. Appreciate that.